This is a market review for January 30th, 2025. Today is a Thursday. We had 8:30 red folder news. Let's see which news it was. GDP and unemployment claims at 8:30, and then orange folder pending home sales at 10. As you can see today, we had a little larger volume than the previous day. However, we still had very indecisive price action, I'll call it. You see the wicks above and below and how substantial they are. Um, Kind of shows the indecision of the market right there. Now, as we go down to the hourly, you can see better. I'll go down to my bias or why I took the trade that I did as we get to the 15. But as you can see here, market opened immediately, raked down and then raked up. And then again, tanked all the way down here, didn't take any liquidity, not even on ES. So it's not like there's an S&T between these lows we could have played. The one thing I will say is this Ferrelia that I mentioned yesterday played a big part in my bias today. Before market opened, so let's say like around 8 o'clock right here, I looked at price and I saw that we broke through it to the upside once again, reacted off of here, here, and that we were playing bullish out of that. So that made me want to play more bullish, despite what the lower time frame bias would be, which would be 2 o'clock, played bullish, reversed. So if London reverses, New York continues, which means we would play bearish, which did end up happening. But once we get down to the lower time frames, it'll look more like accumulation, manipulation, distribution than anything else. Maybe that's what it is, because if we look Asian sessions at 12, this is very rangy. It doesn't look like, well, we're bullish, oh, we're bearish. It kind of looks like accumulation. Um, but then that makes you wonder, why wouldn't this down here be counted as the manipulation? And because that's just the way it was going, I have no clue. If I'm be honest, today is one of those days where I took my trade, glad I won it, and I honestly turned off the charts, glanced a couple times, but then I saw what it was doing and I had no clue at all. Um, Very, how should I say? I'm gonna say wiki. It is very wiki. There's a lot of wicks, not much of a trend. That's a better word, but not trending. 5 minute, you can see here, clear consolidation, not going anywhere, not going anywhere. Market opens here, rips up above these highs, new day opening gap reaction, comes down, takes out no lows, just these ones here, which are already taken. And then, let's just remove something. Lunch starts there and ends there. See again, sales are profitable, so we aim for highs, which we end up doing. Don't get to this one, we'll get to conjugate encroachment of this hourly again. Retrace down to this 5 minute. Before we move past that, there's this 5 minute AM session that kept pushing price up, which is another thing that I saw, which I liked. Even though it was horizontal, this was very much like keeping price up. What else? 5 minute here pushed us up, and then again went down. Didn't take anything, no liquidity except for internal, and then came up and consolidated. So price moved. It did move. But it didn't really make too much sense in my opinion. Um, I think the best explanation for it, at least AM, is accumulation, manipulation, distribution, right? Because even if we look at Asian session here, Asian session to London session, we didn't really move. It was very horizontal. There's not much trending. Whereas if we look here, well, that's not a good example because that's just straight continuation. Here we go. Asian session here started accumulating. London session start trending upwards and then reverse. This is a reversal. I think this is more accumulation. So it's another one of those things where experience will take in. Now this could have been the manipulation, and it could have played bullish. But the reason that I continued bullish wasn't so much because of this, it was because this hourly and how price was reacting with this 5 minute. I mean, we extended, I'm pretty sure I measured this equilibrium is like pretty close to here. So we hit it and then reversed immediately off of that. And then again, playing off this 5 minute like that. And I was bullish on the week high time frame. So let's call this manipulation up here. New day opening gap distribution downwards to first presentation. Didn't really take any liquidity at all. Yeah. Take it down to 1 minute. I'll show you executions. But again, big rangy accumulation here. 5 minute reactions. We had an SMT of these lows, meaning ES. This low was even above this one after 9:30. So that was another thing that made me play bullish. Now I entered off the candle. This is it. The reason I entered off of this fair value up here, or if you look 638.25 right there, where that blue markers low of this candle is 638. So I got in there, put my stop at constant encroachment of this because this is a fair value up, and so I wanted to allow price to come down there and give it a little wiggle room, which turns out was very good because this right here is constant encroachment. This my stop loss was at 618.75, right? You can see over here. And if we look at this low up here, it was 619. So one tick difference between 618 on the right side and 618.75 on the right side and 619. So that was a good stop placement. And then price spread. Another reason I felt okay taking this trade during the opening range was how 9 to 9:30 reacted. Look here at 9, price reacts off of this fair value up here. Nicely plays lower, played off this one, played lower. It was acting very, very nice and very fluid, or fluid enough for me. Closures within this as well was great. And then boom, price came up. I took it out at this high and this high. As you can see here, half my position off there, 2 contracts off there, and then I was trailing my stop loss trying to see if price would want to come up to here. There's no opening gap low. So I put my stop loss under this fair value gap candle right here, which ended up being the same price as the other one. So that was that. There was no signs of reversal in the S&P, nothing like that. Kind of just turned around. Mood opening gap closure great. I do have to say, high volume candles here, lower volume, more wicks. Could have been something. Then we tip over, come back up, perfectly execute that high up here, 729.75, high here, 729.75. And then we expand lower, lower, and lower, taking up AM session highs. Well, practically PM session, not PM, London session lows, as well as New York AM session. It came all the way down to this first presentation here. Gonna be honest, probably wouldn't have been able to enter this even if I thought it was, because there's no S&T. Another thing to note, this is 950, macro starts the move, boom, happens perfectly. We hit this here, no S&T down here either, and then lunch kicks in. What do we aim for? Whatever the stop loss of whatever has been profitable, which was sells. So we're aiming for these liquidity, come up, get it, constant correction on that hourly once again, retrace off that into this 5 minute. We get a low time frame S&T here, fair value up here. If we're continuing to play bullish, which I don't know why we would, maybe you just, with experience, you can tell that this is just going to be a high consolidation day or what, but we reacted off this 1 minute fair value, playing higher, took out this low previous or right before algorithm kicked back in. So then we ended up just going straight from there, higher again. No external liquidity touched. Just another presentation reaction. Did I just move something? No. Yes, I did. Yeah, react off this, down once again, no external liquidity touched, up again back into the range. Just a very range heavy day. We set it in AM session and just stayed in it throughout. So like the conclusion that I've come to about today is that it was accumulation, manipulation, distribution. Overnight accumulated, New York manipulated bullish here, distributed lower, and then kind of just went horizontal for the rest of it. We are starting to list higher. I would like to, looks like we're going to tap into this. We look on the weekly time. That. I'm not the biggest fan of a TGIF move tomorrow, since we've kind of just been playing catch up all week. But it's too good. 2030. So 20% retrace would see us in between these fair value gaps. Like I said, not the biggest fan of that idea. I think we're still trying to dig ourselves out of this hole that we made on Monday. What I do see happening more likely is that we're going to, let's go down to the hourly. Listing higher. This is the 8 o'clock candle. What I possibly see is us going higher, London playing bearish, reversing, or London playing bearish, New York reversing higher. This is one of the rare days where I'm not looking for TGIF on Friday. That's because we've just been dealing with Monday all day or all week. So looking to play bullish tomorrow. Hopefully close the week bullish. I say hopefully, like it really matters to me. I'd like to, because that's where we're trending, but honestly, I just really want to get back into a trending market. Like this looks not this, that's not easy. Or this, but this looks so nice right now. Mhm. It looks so nice. But hey, if we learn to trade in these conditions, we're pretty set for anything. Um, yeah, iffy day, okay price action, a good day for getting experience. Yeah, this has been a market review for January 30th, 2025.